Hello, so this is George. I hope you're doing great. So I just want to give you a brief recap of what I had shown you in action. So the CRT, basically that's the CRT model that I had shown you basically the other day that I posted a video. I just want to do these to just open your eyes. It's just a recap to open your eyes to see clearly now for you to see this thing in action. Okay, the first thing that I told you guys, or the first thing that should always be at the back of your mind, is the trend of the market. It must be in the trend of the market for it to work well. Of course, you can have one or two setups, CRT model setups working against the trend, but that's just one candle. But mostly, I want you to take trades that are aligning with the trend direction, because you don't want to find your ass in the wrong side of the market. Okay, yeah, so the first thing you can identify here during the Tuesday candle, we had a very nice candle during on Tuesday, and on Wednesday we were having we saw this candle sweep the previous the low of this candle, and you see it closed above and it closed bullish. So first thing is, from the first session that we had, candlestick interpretation, you can see this candlestick is clearly showing us that it has a long lower wick, which is showing that we're having a lot of rejection from the downside, pulling or pushing prices higher and higher. So that means that buyers are getting in the market. Second thing is, you can see this candle also closed bullish, which shows that the buyers are the bulls have now gained control, are now gaining control of the market. So when this happens, so we have swept the sell side liquidity in this case. This one is our sell side liquidity, and this is also our buy side liquidity. By the way, I had done this analysis early in the morning yesterday with my trading floor, as well as later on in the evening with my students, just showing them how this model works easily. So the other thing you're supposed to do from here now is to have to scale down to a lower time frame to spot a fair value gap. Most of the times I told you guys, when you're on the daily time frame, you go to the 1 hour time frame as your lower time frame to spot a fair value gap you're going to enter from. When you see a CRT on the 4 hour time frame, you want to go on the 15 minutes time frame to spot a fair value gap where you will be trading from. And as well, when you're on the 1 hour time frame, it's okay to go to the 5 minutes time frame to spot a fair value gap, or another block if you want to specifically trade from another block to trade from. Because now, how do you know where to enter from the next candle? Of course, we know it's a bullish candle, but how do you know where you're supposed to enter from? Okay, that's now where you have to scale down to a lower time frame to spot an entry, or where you're supposed to get in the market from. So what you're gonna do is, by the way, I also did other examples on my TikTok. You can also check out my TikTok page. There are the examples I did on how to scale down to a lower time frame. So this is just an example that I want to do, that I posted here for you guys on YouTube. Okay, yeah, so what you'll have to do for the daily time frame, I've told you guys, we'll just have to go to the 1 hour time frame, which is now going to be like our lower time frame in this case, and we're gonna try and spot a fair value gap in action that we can trade, that we can be trading off from. Okay, yeah, so what happens in this case is, of course, where price currently is, we would have gotten a good entry from here, but then that entry has already passed us, so we'll be waiting to see price give us another re-entry. So the first way we're going to the first thing we're going to get, the first way for those guys who trade order blocks, the first idea is that's a high. So once that high gets created, you can have this candle as your order block, and you can expect price to take orders from there. But that's quite, there are chances that the trade might not be activated. So of course, we're gonna have to play the chart, try and see if we're gonna create a fair value gap, so that we take our trade off a fair value gap. Okay, yeah, so I'm gonna just let prices. Fantastic. So you can see here we have created prices created for us this fair value gap right here, and you can see we already have a breakout structure to the upside, an internal breakout structure, that is. So we're gonna have our entries, or we are supposed to take our trades from the from this fair value gap, and then you will be targeting the previous day's high that has not been taken, which is in this case our buy side liquidity, because we agreed that anytime price takes up takes out a high, we must take out a low as well. And then for your stop loss, I told you you have to place your stop loss below this candle that created for us the fair value gap, slightly below it. Yeah, so because now this candle, ideally we having orders here, and of course when we're having orders, you never know if there's going to be a manipulation, so you can't really have your stop loss just exactly at that candle. So you're usually going to have your stop loss slightly below this candle that creates for us that fair value gap, and of course you're going to be targeting that high, which gives you, you see, a cool 3.6 RR, which is fantastic by the way, because you need a minimum of 3 RR. That's a good RR. So of course we're gonna let the chart play, then we're gonna see how price reacts off from that fair value gap. You see, now this is the reason why you have to have your stop loss slightly below that candle. Okay, see, if we had our stop loss exactly at this candle, you see, we could have gotten stop loss and price could still be moving in our direction till now. So that is the reason why you need to have your stop loss slightly below that low. Of course, price is still currently moving, but I'm still expecting to see price take out that previous day's high. So of course, during the day today, in the event that I will be looking for any setups to be trading on gold, I will be looking for more buys. I'll be looking for regions where I can add more buys to push prices up to the previous day's high. That's around at 29.43. Remember, this is not financial advice. Apply these at your own risk, and leveraged products carry a lot of risks with them. So basically that is how you trade the CRT and how to scale down to a lower time frame to spot an entry. I had done the same for the 1 hour time frame, the CRT on the 1 hour time frame, and then we scaled down to the 5 minutes time frame to spot our entries. So you can check out on our TikTok account. You're gonna see a lot of that, as well as on our Telegram channel. The link to our Telegram channel is attached below on the description. You can join if you're not already there. For now, guys, that's all I have for now. I will see you on my next video. Okay, yeah, love you guys.